I mean, what's incredible on this chart is that, when everybody talks about being long the S&P 500, it was always really a proxy for being long Amazon, Facebook, Google, Microsoft, and Apple. And at the peak, in May of this year, it was still, 25 cents of every single dollar of the S&P 500 were these 5 companies. And, we always said the market bottom will be when the generals, quote unquote, get shot, to borrow a phrase from Gavin Baker. And it looks like the generals have been shot.
Yeah.
And what's incredible is this week, every single one of those companies, other than Apple really, reported pretty crappy earnings. They got totally taken to the woodshed. The percentage of these companies as a percentage of the S&P is now, off by 500 basis points. It's down to 20%. Yet the markets are ripping higher today. So I think it's kind of what we talked about 3 weeks ago. Like the bottom is kind of in for the short term, so it's really exciting actually to see. I think this is the point where you have to now start to get pretty constructive about where things are going. Because if this stuff could not bring the market down, it's hard to see something other than an exogenous event, probably some Russia-Ukraine event, really having a negative impact. So to me, I'm kind of like, I don't know, it seems like pretty bullish for me. I think the stock market is going up. Then it'll go back down because I think what David said is right. But for the short term, this thing is going up.
Short term up. And
we've generally been positioned for it to go up. And at some point we will reverse and position for it to go back down, but it's going up. I think David's generally right. We do not have time for adventurism right now because even before we engage in some of these other places, there are a lot of, headwinds that are working against so for example, in China, you have these massive demographic headwinds that are just building. We have to see what the CHIPS Act does in terms of follow through to China's ability to expand militarily or technologically. There are all of these things that you owe as a citizen of the United States to see some more data on the ground in terms of its empirical impact before you re-underwrite a different strategy. Right now, the strategy is working. We are observing this, one China policy. I think that's the right thing to do. And now let all of this other stuff play out. One part of it is meta.
Okay.
But one part of it is actually about what we talked about a few episodes ago, which is like this big tech put, right? Mm-hmm. Where they define the rules of the game on the field for every other startup.
Mm-hmm.
And I think the third part is just about like the era of big tech being over and what it means for the stock market. If you section it out in those 3 ways, Jason, we can have a pretty rich convo. I'd love to tease some
Where
of this up.
Where do you want to start? Yeah,
okay, so let's start with Meta. So Nick, can you please throw up Apple versus Meta for a second? And let me just give you guys the talk track and then maybe we can go from there. So when you look at Apple versus Meta, there's this really interesting thing that comes up, which is in 2016, and we've said this before, you could not give Apple stock away. They were generating a ton of cash. It was sitting on the balance sheet. In many ways, Facebook was doing the same thing. And what's interesting to note here is the black line is the performance of Apple stock as they've given back and they've used a ton of their own balance sheet cash to buy back the stock. Okay? So they've spent $396 billion since 2016 to buy back stock. In the same time, Facebook has spent almost $100 billion. Now, here's where you start to see the divergence. So you would have said, well, shouldn't Facebook's stock have reacted in the same way? And for a very long time, it actually looked like it was right until about September 21. And then obviously this thing fell off a cliff. And the reason why it started to fall off a cliff was somebody started to notice that, hold on a second, even though you're buying back all these shares, the bottom of the funnel, right? You're leaking all of these shares to all of these new employees. Why are you hiring so many people? And this is when people started to uncover what was happening above the line at Facebook and is what caused this massive dispersion. So, Nick, if you go to the first chart, so what has actually been going on above the line? Here's what's going on. If you look at the light purple bar, Facebook in the last 2 years have spent $25 billion on reality ads. And they said that they're going to spend, meaningfully more in 2023 and then sustain that investment for a while. So if you do a little bit of math, if they spend around 4 billion a quarter right now, so 16 billion a year, that'll go to 25 billion in 2023, and then they'll sustain that. What that means is that over this, 12 or 13 year life of Reality Labs as we've seen it, these guys will have spent $250 billion. And what I did here was I just wanted to understand.
Hilarious.
I wanted to understand $250 billion in the context of other major leaps in humanity. So at the left is what Apple spent in its entirety. By the way, these are all inflation adjusted dollars for today. Apple spent $3.6 billion to create the first iPhone. And what they did was they said every subsequent version of the iPhone would only be funded from the cash flow and profits of the generation before it, right? So they used consumer demand as their guiding principle. So it was a very incremental approach. iPhone 1, iPhone 2, and now we're at iPhone 14 or whatever, 13. But the point is, it took $3.6 billion to get that juggernaut off the ground. The Manhattan Project will cost $23 billion in today's dollars to create the atomic bomb. Tesla, in its entire life, spent $25 billion to get to free cash flow profitability. And they took this incremental approach as well.